So the first step in using your WOWIT budget template is setting up the information for your purposes. So setup or configuration or initialization or customization, whatever you want to call that, that occurs on the monthly template worksheet, and that's where we are right now. So the very first thing you want to do is adjust the credit card information. So from this worksheet, scroll to the right and you'll see a little table called credit cards. Right now you'll see it's numbered 1, 2, 3, 4, 5, 6. You can only enter 6 credit cards to function within this template. But 1, 2, 3, 4, 5, 6, that's not a very convenient naming convention. So let's modify these to something that makes more sense. So perhaps you have an Amex card. We'll replace 1 with Amex. And maybe you have a Visa card. We'll replace 2 with Visa. Maybe you have a MasterCard. We'll just mix it up here and add some lowercase. And let's add a Costco card. How's that? For the remaining items, don't leave them blank. Just leave the default name that was there originally, or nickname. So in this case, 5 and 6. So that's your very first step. You've completed step 1. The next step in initializing your monthly template is the information here in column A, rows 4 through 7. You need to replace these values with your own. So cell A4 is the start date. As you can see, the references here in column B point to the data you're going to place in column A. In this case, I've already entered the start date as the 1st of January 2020. The start date does not have to be the 1st of January. It doesn't even have to be the beginning of a month. It can be whatever date you choose to begin logging your information. Whatever start date you choose, you want to ensure that the starting balance matches that date. So typically I'd recommend you go to your online banking and find that date and make sure that the starting balance matches. So I've entered 2434 for this demonstration. Now there are 2 other fields here. This is all related to the primary account you want to track. A lot of banks will charge you if you don't maintain a minimum balance in that account. If that's the case for your bank, then you want to enter that amount here. So in this case, let's say $1,500 is the minimum. So if the balance drops below $1,500, then there would be a fee, a charge applied to the account. So that's something you want to avoid, so we note that here. The next reference is to a warning for that balance. So we know we're going to be charged if the account balance drops below $1,500. So we want some warning before that happens. So I'm going to enter 2,000. Once the account hits 2,000, then we want to be warned that we are getting a little low before we hit that minimum balance. You'll notice there's another entry here. This is a calculated value based on the start date you enter. So the only information you need to enter is within this box. So we've entered all that information. We are now ready to begin entering the actual data that will be associated with that. So now we're looking in the table itself. The first thing you'll notice is the category, the very first category is balance. If you click on the plus sign, this is going to expand the rows in that grouping. You'll notice they're all grayed out. What does that mean? If we click on a cell that's grayed out and try to type something, we get a message. This cell is protected, basically. When you see that, that's a warning that you should not attempt to enter anything there. Now, of course, in this case, it's not allowing you at all. You could go to Review and unprotect the sheet, and that would allow you entry. But the whole point here is to protect that value from making a mistake. You don't enter anything in that section. So basically anything you see with that gray shading, you do not enter information into those fields. They're available for you to see. Some of them are calculated fields, but you don't enter data there yourself. What you want to do is for every row here on the left, look at category and subcategory, and you're going to assess whether or not there's information that applies to you in that situation. Let's go back up to the top. I'm not going to start with salary. I'll show you that in a moment. Let's start with dividends earned. Perhaps you have some dividend income. The first thing you want to do is enter the amount. Let's say that you get $50, a positive amount, notice. Positive because it's income, $50 each month. As soon as you click off that field, you'll notice the cell in column E turns red. So these columns are set up to give you some guidance in what data you need to enter. So always start with the expected amount in column D. As soon as you've entered that, you will see corresponding fields will appear in red. If it's in red, you need to enter information there. In this case, it's a drop down. Let's look at our options. Now, these options are the same for everything in column E: biweekly, semi-monthly, monthly, weekly, or defined months. In this case, we'll choose monthly. Now, again, as soon as that's been entered, you notice another column turns red. That's because you need to enter data there. The date of the month on which this dividend earned will appear. So this says date of the month. What you want to avoid here is entering a full month. This is just the number of the month. So if it's the first of the month, you would enter 1. If it's the 15th of the month, just enter 15. Let's pretend 10th of the month is when this is applied. You've entered the information, there's nothing else red in that row, you're successful. Now that was a monthly entry. So I'm going to remove this information, and instead of monthly, what if we chose a different frequency? So let's choose biweekly. When you choose biweekly, notice a different set of cells is now highlighted for you to enter data. Again, red means you need to enter data there. Now in this case, weekday. This is a drop down. You'll select the day of the week. Let's say Wednesday. You also need to enter the date of last entry. So this is a reference point so that the calculations are accurate. Specifically, the start date of this sheet is January 1st, 2020. Whenever you're asked to enter a date of last entry in column I, regardless of what this is for, the date of last entry should be before the start date of the file. That way you won't interfere with any of the calculations. There'll be no confusion. So in this case, let's say 20th of December. Now you'll notice this comes up as a full date. So you have to be very careful here because this comes up as 2020, and we need it to be the December before the start date, which is 2019. And now that is complete. Notice there's a calculated field in column J that appeared after we entered the weekday. If you tried to type over this date, you'll notice again you get the error that it's protected. So you don't want to mess with that. We'll leave that alone. So that's what would occur for biweekly. Now again, I'm going to delete these. I'm going to come back and show you what if we didn't choose biweekly? What if we chose a different frequency? Let's look at semi-monthly. Semi-monthly, again, red means you need to enter data. So semi-monthly, date of the month when this will occur. Remember, this is just a number, not a full date. So let's have this happen on the 5th of the month. And now again, for reference, you need to enter a date of last entry. So let's say the 5th of December. Again, we have to modify that year. It's really important as you're going through the monthly template. This is your setup, your initialization. Take your time when you're setting this up because this controls all the rest of the file, all the activity, the calculations, the charts, the displays, everything come from this monthly template. So take your time, work through each item. But don't worry if you make a mistake. You can always go back and correct it. So now we've done semi-monthly, we've done monthly, and we've done bi-weekly. Let's look at weekly. So when you enter weekly, again, it comes up and asks you what day of the week. You select the day of the week, let's say Friday, and date of last entry. Last Friday was the 27th. Again, make sure you change that month, or rather year, so that it is before the start date of the file. Excellent. You notice again, nothing else is red. You're done there. So one more time, we're going to go back and choose the very last frequency selection. This is defined months. So defined months is a special frequency you want to use when you have a transaction that you know is going to occur, but it doesn't necessarily have a frequency like the others. A lot of your transactions are going to be monthly. You might have some weekly, you might have some bi-weekly, even semi-monthly. But then you might have some transactions that occur only once per year, or you might have some that occur 4 times per year. There are a lot of different reasons for this, but whenever that occurs, that's where you want to use defined months. So under the defined months column, column F, you're going to enter the months in which this activity will happen. So this is a dividend, so let's say it's a quarterly dividend. So it's going to happen 4 times a year. The way you enter the months here is not by the name of the month. You want to use the number, have to use the number, and you need to separate the numbers with a comma. It must be a comma. So in this case, let's say January, and then April, and then July, and then October. Really important for the defined months. Enter the number that designates the month and separate the months by a comma. If you only have 1 month, then you can just enter one number. But the commas are very important. One more field we need to enter is the date of the month. Now you may not know, or it may vary when the amounts come through, and that's okay. Enter some sort of estimate so you have a guideline of when this might happen. Let's say 20th of the month. And again, this is just a number, not a full date. And now everything is outlined there. Perfect. So you've seen how the different frequencies work. You've seen the different selections, the red backgrounds in the cells to identify where you need to enter data. There's another piece of information you need to understand here, and that's regarding these series. So let's look at salary as an example. This is a series entry. So by series, I mean the subcategory name has a numbered suffix. In this case, salary 1, salary 2, 3, 4, 5. That number at the end of the subcategory, that does not refer to different salaries. Let's say you have 2 jobs. So you have 2 different salaries. That's not what these numbers are referring to. What these are referring to is the sequence of the frequencies. And that sounds a little odd, so let me give you an example to explain this better. Let's say if you only get paid monthly, this is much more straightforward. We'll do this one first. If you get paid monthly, let's say your monthly income is $3,600. You'll notice right away it asks for a frequency. If you're paid monthly, then you select monthly. Then it asks you for what date of the month. So probably the last day of the month. I'll enter 31 here. And something to note now that I've entered 31 here, you don't have to be concerned about months where that number won't appear. So for example, in November, there is no 31st of November. That's all right. The calculations in the spreadsheet will handle that for you. You don't have to worry about that. So you enter typically the end of the month. If you want, you could enter 30 here. It's no problem. So monthly is fine, only once per month. But what if you are paid twice per month? Let's look at that entry. Now you'll notice a few other things happen here. So first of all, semi-monthly, we know we need to enter a date of last entry. Let's enter, well, actually, this is semi-monthly, so we'll get paid on the 15th. And then the date of last entry was in December 15th. Now, why is this cell pink? This cell is pink because there are too few entries if you are paid semi-monthly. If you're paid semi-monthly, then there needs to be another entry for the salary. Since we've only entered one, but you know you're going to be paid twice per month, we need another entry. And that's where these series come in. So we'll say we're paid $1,800 on the 15th. We're paid $1,800 on the 31st. We mark this as semi-monthly as well. And then we enter the last date entry. Now notice these dates here. The dates need to reflect that particular entry. So if we're talking about salary 1 and you're paid on the 15th of the month, the date of last entry needs to reflect that entry. If you enter the 31st of the month here, that doesn't actually match because the expectation is it's paid on the 15th. So you just want to pay attention to those entries. So this same concept of a series applies to all the frequencies. So let me remove this information. And let's choose a different frequency. So let's say now we get paid bi-weekly. That's a little bit different. Now you'll see we still have the red highlights for day of the week. And I don't know if I'm entering correct information here. I don't know if Friday matches. I believe Friday does match the 27th. So forgive my inaccuracy if I'm not getting these right, but I just wanted to highlight for you how the series function. So if you were paid bi-weekly, and this is a series, these pink highlights are showing you need to make another entry. It's insufficient to say bi-weekly and only enter it once each month. And you might be wondering, well, why would I have to enter it 3 times since it's bi-weekly? Well, there are some months, 2 months each year, typically, where you will get paid 3 times in 1 month. So that's why the pink fields appear. You would simply ensure that you select your frequencies here, the same as you did previously. And we're going to make sure that these all match. Copy the date all the way through. The important part here is that the year is before the start of the worksheet date. All right. Now, what if this were weekly? Let's remove these entries and I'll show you weekly. So if you select weekly, now just like the other series, it knows you need to enter weekly for all the other fields as well. Same situation. Again, we still need to know the information for the individual entries. And we'll just make sure, again, that our years match. And there you have it. One thing to note, if you have a series entry and you select something like defined month, well, specifically, if you select defined month, then it's not a series. You will not have a series for defined month. You would only enter the one instance, the same as you would for monthly. That occurs just once. And that's because defined month, you're going to specify which month and the date of that month. So that's not a series. That's a unique situation in itself. So that's the concept for series. And there are series for more things than just salary. You'll see down here for mortgage. There are series for mortgages. You could potentially have a weekly mortgage. That's why we have 5 potential options. Also, if you have a car loan or a car lease, that's another example of a potential series. There are some other series in here further down. So again, personal loan, that's typically going to be a monthly payment, and other loans as well. So that's how you would enter your series entries. There is one more thing I want to show you for a series. So let's remove all of this. And let's make this monthly. We'll say the end of the month. Because monthly has been entered here, then the series really isn't a series. It's just once per month because of the frequency. If you were to add another entry here, again, it wants your selection. And notice what happened here. This is now orange. It's orange because you've entered too many items in the series. So remember, pink is going to appear if you don't have enough entries for the series. Orange is going to show you when you have too many for the series. So in this case, monthly can only occur once per month. And since you've entered it twice for the same series, salary 2 is part of that salary series, it's noting that that's just not appropriate. Again, the whole point of the highlighting in the worksheet is to help you recognize what values to enter and how to set everything up in the monthly template correctly so that you can track your information going forward. That's information about frequencies. There's something else I want to show you specifically when it comes to credit cards. There's a section here for credit card payments. So basically, your credit card payments are expected monthly, typically. The entries here, even though, remember, we entered nicknames for our credit cards over here, that's not going to be reflected in the subcategory reference. And to avoid adding code and causing this file to be a macro, there were some limitations on what I could do with the references. So long story short, the credit card references here will remain with the default numbering system 1, 2, 3, 4, 5, 6. So let's say you know when you're setting up your monthly template, you know you're going to have to pay your credit card bill monthly. We have $200 we put on that credit card. Oh, and by the way, that's an expense, so it needs to be entered as a negative amount. The expected amounts do need to reflect positive or negative for credits or debits. Now, the frequency, typically, in most cases, that's monthly. Now, we are familiar with the date of the month. Let's say this credit card is always due on the 17th of the month. Notice there's another field that is highlighted here, and that's the credit card cycle end date. So typically, your credit card is going to have a start date and an end date, and within that start of cycle and end of cycle time frame, those transactions are going to be due the following month on a particular date. It depends on the credit cards. It also depends to some degree the country in which you live and what the rules are for the credit cards in those countries. But generally, you will have a cycle. And it's important to understand as you're entering transactions later on for the spreadsheet to reflect the credit card payment that is on a particular due date, it has to know when the cycle ends. And that's why this field in column K has been highlighted, because you need to specify what the end date is for that cycle. Let's say the end date here is 26 of the month. Now again, note, this is not actually a full date. This is just the number of the month, because this is going to be applied to many different months. Just enter the number, not the full date. Credit cards are something else to note here. You actually need to make a decision when you're filling out the monthly template. You're going to be entering all sorts of different amounts for expenses. So, for example, let's say you have some physiotherapy that occurs throughout the year, and you know generally what the amount is. Let's pretend that you pay for that physiotherapy on your credit card. Now, if you were to enter the amount that you paid for your physiotherapy in the monthly template, and then you also estimate what you pay for your monthly credit card, technically that's a double entry. You're specifying that expense twice. So what I actually recommend you do is enter 0 for your credit card payments, but then enter all the other amounts related to a particular subcategory with their legitimate numbers. That way you have everything categorized. All your expenses are categorized, and you know you have a credit card payment that will be coming up, a bill, but that bill is going to fluctuate based on all the other expenses. So that's my recommendation. Leave this as a 0 amount. Otherwise, it's going to be counted twice, and that's going to be a bit confusing. Something else I want to show you here, and I'm going to go down to the insurance section for this. Let's say you have home insurance and you pay $75 for your home insurance, and that's incurred monthly on the 22nd. Excellent. Now, $75 is the amount you're paying as of January 1st on 2020, the start date of this file. But perhaps your home insurance is renewed on March 22nd. And when it's renewed, there's a different amount. If you just replaced the expected amount here, then technically the previous months, so January and February, would also be replaced with that different amount. And that skews your forecasting. So what you want to do is, as of the start date of this file, you enter the amount. And when it's changed, that's what these columns are for. Column L and M and N and O are for this purpose. So on, let's say the effective date is March 1st of 2020. And again, you'll see right away, this cell is highlighted in red when you enter that date because you need to enter data here. The new amount will be $82 beginning on that date. Perfect. So now January and February, this amount will be applied to your forecasting, but then beginning in March through the end of the year will reflect the updated amount. Now we'll take that a step further, and maybe it's updated again. Maybe in November, updated to $94. You'll notice I've entered an amount here, so this cell turns red. And we'll say on the 11th of November that this change takes effect. So now January and February, you'll be paying $75. March through October, you'll be paying $82. And then beginning in November, you'll be paying $94. So that's why those columns are there. There aren't that many instances where you'll use those columns, but it is important for those particular instances. Insurance, perhaps cell phone bills, things like that, where updates will happen. And you want to maintain a good forecast. You don't want to have dates in the past skewed because of subsequent updates. That's what that is for. Now, as I've been entering information, you may have noticed numbers changing in these little tables at the top. These tables are just a quick view to help you see what you're dealing with in your monthly activity. If we look at the first table, this is all about each month. It's using the information you enter in your monthly template, and it's calculating how much money will be coming in versus how much money is going out. Now, one thing to keep in mind here, the expense amount, you'll notice it says recurring monthly. So any amount that was entered with the frequency as defined month is not included in this calculation because it's unclear to which month it applies. So it's not been included here. This is something to be aware of. but only defined month. All other frequencies are included. Expenses for monthly minimum, again, excludes the defined month entries. Now, this talks about monthly minimum necessities. And the necessities are all about column C. The only reason you need to enter anything in column C is so that this information in these tables reflects reality as you know it. So after you've entered all your monthly template information, you want to go back through each entry and figure out which one of those is absolutely required. So for example, your home insurance companies typically are not very flexible when it comes to payments. So that entry you might want to mark as a necessity because the insurance company wants their money. On the other hand, if you were in an entertainment section and in the subcategory that referenced concerts or festivals or sporting activities, that's probably not a necessity, but it depends on your opinion, and that's why the field is here. It's how you view these items. Completely up to you. And the only reason it's here is to help you see what are you looking at each month. What's your typical month? What's the minimum you need to survive? And also how that works out to an annual perspective. And this just gives you an idea of you make a certain amount of money and you want to understand how much of that money you're going to have left at the end of the year. So this just gives you a high level view of that activity. We have one final table here that is the annual activity, but it's averaged for 1 month. So here, this is your month view, but then all of the activity for the entire year, and you'll notice this includes your defined month. It's not just recurring, the annual activity. So then you can see all of the sums are included in annual activity, but then we basically divide by 12 here so you can see how that averages out per month. So just 3 different tables to help you see, generally speaking, where's your money going, what's happening with that activity. That is how you deal with your monthly template worksheet. Please take your time as you go through these entries. Again, you can change these, it's not a concern, but you do want them to be as accurate as possible before you start making your first transactions, or rather logging your first transactions. And in subsequent tutorials, I'll look at the other worksheets and how you work with those.